Oil at $144 a barrel doesn't just mean expensive gas. It means governments start shaking, currencies start collapsing, food prices explode, protests fill the streets, and, somewhere inside, crowded government offices from Pakistan to Egypt to Argentina, officials begin realizing they may be running out of time. Because the terrifying part isn't the oil price itself, it's the domino effect that comes after it. And once that chain reaction starts, emerging market economies are usually the first to bleed. Right now, most Americans still think of oil shocks as an inconvenience. Higher gas prices, more expensive flights, maybe inflation goes up again. But outside the United States, a massive oil spike can become a political weapon of mass destruction. And history has already shown us what happens when energy prices spiral out of control. Governments fall, riots erupt, debt explodes, entire economies enter survival mode. And this time, the world may be even less prepared than before. Because underneath the headlines about wars, elections, China, Russia, and global trade, the entire financial system is sitting on one dangerous assumption: that energy stays relatively affordable. If that assumption breaks, everything else starts breaking too. Let's rewind for a second. Imagine oil suddenly jumping to $144 a barrel, not slowly, not over 2 years. Fast, violently, maybe after a major escalation in the Middle East, maybe after shipping routes get attacked, maybe after Iran closes parts of the Strait of Hormuz, maybe after a NATO confrontation spirals. The exact trigger almost doesn't matter because markets react first, and panic spreads faster than facts. The moment traders believe global supply is threatened, oil futures explode upward. Insurance costs for shipping surge overnight. Tankers start rerouting. Refineries panic buy supply. And suddenly countries that depend heavily on imported energy are staring at a nightmare scenario. Now here's where things get dangerous. Emerging markets don't have the same financial armor as the United States. America can absorb shocks longer because the dollar is still the world's reserve currency. Washington can print debt. The Federal Reserve has enormous leverage. Global investors still run toward American assets during crises, but countries like Pakistan, Sri Lanka, Kenya, Bangladesh, Egypt, Turkey, or Argentina, very different story. Most of them import energy. Most of them already carry heavy debt. Most of them already struggle with inflation. And many of them owe massive amounts of money in US dollars. That detail matters more than most people realize, because when oil prices rise, the dollar usually gets stronger too, and that combination becomes absolutely brutal. Think about the trap. Oil becomes more expensive. The dollar becomes more expensive. Debt payments become more expensive, imports become more expensive, food becomes more expensive. And ordinary people suddenly can't afford basic survival. That's how economic stress turns political, fast. Inside finance ministries around the developing world, officials begin trying to stop currency collapses. They burn through foreign reserves. They raise interest rates. They beg for emergency loans. But the market smells weakness. And once investors lose confidence, capital starts fleeing. This is where the domino effect really begins, because economies today are connected like electrical circuits. One failure sends shocks into the next system, and then the next. Look at what happened in Sri Lanka just a few years ago. Fuel shortages, food shortages, mass protests, citizens storming government buildings, the president fleeing the country. That crisis wasn't caused only by oil. But expensive energy accelerated everything. Now imagine similar pressure happening simultaneously across multiple vulnerable economies. That's not just an economic event. That becomes geopolitical chaos. And major powers know it, especially China, especially Russia, and especially the United States, because energy crises don't stay local anymore. They reshape alliances, they reshape elections, they reshape wars. Now imagine you are sitting inside the White House during an oil spike. On one side, American voters are furious about inflation. Gas prices become political poison instantly. Presidents lose elections over fuel prices. Always have. On the other side, Washington is also watching allied countries overseas begin destabilizing. And here's the uncomfortable truth nobody likes admitting publicly. America's global influence partially depends on weaker nations staying financially stable enough to cooperate, because once countries enter economic desperation, they start making very different strategic decisions. And this is where China enters the story. Quietly, patiently, strategically. While Western media focuses on military headlines, Beijing has spent years building financial influence across the developing world. Ports, railways, energy infrastructure, debt agreements, trade systems, currency partnerships. Now suddenly imagine dozens of countries suffering under a massive oil shock while the dollar keeps rising. Who offers emergency loans? Who offers discounted energy deals? Who offers yuan-based trade systems to bypass dollar shortages? China. And Beijing knows moments of crisis create leverage, the same way America used the dollar system to dominate global finance for decades. China sees opportunity in every crack forming inside that system. But there's another layer here most people completely miss. High oil prices don't hurt everyone equally. Some countries actually benefit enormously. Russia, for example. This is where the geopolitical irony becomes almost unbelievable. Western sanctions were supposed to weaken Moscow economically. But if oil suddenly surges toward $144, Russia's energy revenues could explode again despite sanctions pressure, especially if global supply becomes tight enough. And suddenly the strategy starts looking messy, very messy, because the same oil shock hurting US allies could indirectly strengthen adversaries. That's the kind of geopolitical contradiction policymakers hate. Publicly, politicians talk about defending democracy, protecting stability, securing alliances. Privately, they're calculating energy flows, shipping routes, currency markets, and election risks. Because energy isn't just economics anymore. It's geopolitical oxygen. And without it, governments suffocate. But the scariest part may not even be oil itself. It's food. This is where ordinary people begin truly feeling the crisis. Modern agriculture depends heavily on energy, fertilizer production, transportation, machinery, global shipping. When oil prices surge, food prices usually follow. And history shows food inflation is politically explosive. People tolerate many things. They do not tolerate hunger. The Arab Spring partially erupted after rising food prices collided with public anger. Governments learned a brutal lesson from that era. Once food affordability collapses, political stability becomes fragile very quickly. Now imagine crowded cities across emerging economies facing fuel shortages, power blackouts, currency collapse, rising unemployment, and skyrocketing food prices. That combination becomes emotionally combustible, especially among younger populations already frustrated with corruption, inequality, and political elites. Inside presidential palaces and military headquarters around the world, leaders would start asking one terrifying question: can we maintain control? And that question changes how governments behave. Some crack down harder, some impose capital controls, some censor protests, some nationalize industries, some turn toward authoritarian measures, and others simply collapse under pressure. We'll come back to that in a minute. Because first, there's another piece Americans rarely think about: banks. Global banking systems absolutely hate instability. When emerging market economies start wobbling, investors panic about defaults. Can countries repay debt? Can companies survive? Will currencies implode? Suddenly banks stop lending, credit tightens, investment freezes, and economic fear spreads globally. This is why Wall Street watches oil so obsessively, because energy shocks don't stay inside energy markets. They infect everything: stocks, currencies, real estate, government bonds, consumer confidence, even military planning. And now pay attention to what happens next, because this is where the entire situation can spiral into something much larger. Once emerging economies start collapsing financially, Migration pressures increase too. Families flee instability. Workers search for survival. Borders suddenly become political flashpoints. Europe already experienced how destabilization abroad creates political shockwaves at home. One regional crisis can completely reshape domestic politics thousands of miles away. Now imagine multiple economies destabilizing simultaneously. That's not just a humanitarian issue anymore. That becomes a global security problem. And this is the moment major powers start blaming each other. Washington blames Moscow, Moscow blames sanctions, China blames Western financial dominance. Middle Eastern producers blame geopolitics, everybody points fingers, while markets keep burning, and ordinary people everywhere pay the price. This is also where public trust begins collapsing, because citizens start noticing something deeply uncomfortable. Governments always claim they control the economy, until crises arrive. Then suddenly leaders appear reactive, confused and defensive. Central banks raise rates, then cut rates. Governments announce emergency subsidies, then remove them. Politicians promise stability while inflation keeps rising. And people begin asking dangerous questions. Was the system ever really stable? Or was it just functioning as long as energy remained cheap enough to hide the weaknesses underneath? That question terrifies policymakers because modern globalization was built during decades of relatively affordable energy and expanding trade. Cheap shipping connected continents. Cheap fuel supported massive supply chains. Cheap energy helped maintain political calm. But if energy becomes structurally expensive again, the entire global model starts changing. And this next move changed everything. Some countries would likely stop trusting global markets entirely. Instead of relying on international trade, governments could begin prioritizing national survival. Export bans, food protectionism, strategic reserves, energy nationalism. We already saw early versions of this during the pandemic. Countries hoarded supplies, restricted exports, protected domestic markets first. Now imagine that mentality returning during an energy shock. Global cooperation suddenly becomes much weaker when survival politics take over, and survival politics are rising everywhere, in Europe, in Asia, in Latin America, even in the United States. That's why oil at $144 isn't just about economics, it becomes psychological. It changes how nations think, how leaders behave, how populations react, how alliances function. And here's the really dangerous part. Financial markets today are addicted to stability. Massive debt levels around the world only work under relatively controlled conditions. Governments owe trillions, corporations owe trillions, consumers owe trillions. High energy costs stress every layer simultaneously. And eventually something breaks. The frightening question is what breaks first? A currency? A government? A banking system? A strategic alliance? Nobody knows. And uncertainty itself becomes fuel for panic. Meanwhile, military tensions would probably increase too, because energy choke points suddenly become even more important. The Strait of Hormuz, the South China Sea, Red Sea shipping routes, pipeline infrastructure, critical ports. Every one of these locations becomes strategically explosive during an energy crisis. Navies reposition, military patrols intensify, insurance markets panic. And one miscalculation suddenly carries enormous economic consequences. Now imagine being a smaller country caught in the middle of this. You need energy, you need loans, you need trade access, you need political protection. So who do you align with? America, China, Russia? The answer becomes increasingly transactional. And that's exactly the world we may be moving toward, a world where ideology matters less than survival. This is why energy crises often accelerate global power shifts. They expose weakness brutally. Countries with reserves gain leverage. Countries dependent on imports lose leverage. Countries with stable currencies gain influence. Countries drowning in debt lose sovereignty. And ordinary citizens experience the consequences in the harshest ways possible. higher prices, lower wages, political instability, fear about the future. This is also where extremist politics can rise. Economic pain creates anger. Anger creates polarization. Polarization creates instability. History repeats this pattern constantly, and during severe inflationary periods, populations often stop trusting moderate leadership entirely. They begin demanding radical solutions. Strongmen, nationalism, economic protectionism, blame campaigns. The political center starts cracking under pressure, and if that sounds dramatic, it's because history already showed us versions of this movie before. The 1970s oil crisis reshaped global politics for years. Inflation surged, growth collapsed. Western governments panicked, strategic alliances shifted, entire economic doctrines changed afterward. But today's world may actually be more fragile because globalization created extraordinary interdependence, and interdependence creates vulnerability. One disruption spreads faster than ever before. That's why even rumors can move markets violently now. One missile strike, one tanker attack, one sanctions escalation, one naval confrontation. Suddenly algorithms start trading, prices spike, investors panic, and billions of dollars move within minutes. Modern crises spread at digital speed, but human governments still react slowly. That mismatch creates danger, huge danger. And this is where American voters should pay very close attention, because many people assume the United States can simply isolate itself from global instability. It can't. America may be stronger than most economies, but it still depends on global systems, supply chains, financial markets, strategic alliances, consumer confidence, global trade routes. When emerging markets start collapsing, multinational corporations suffer too. Global demand weakens, financial contagion spreads, pension funds get exposed, investment flows tighten, even US banks become cautious, and suddenly the phrase global recession starts appearing everywhere. That's when fear becomes self-reinforcing. Consumers spend less, businesses hire less, governments borrow more, markets become more volatile, and political tensions intensify everywhere simultaneously. If you want to understand the real power games shaping the world without the boring mainstream news filters, make sure to subscribe, because what happens next could redefine the global order far beyond oil prices. Now let's talk about the hidden political nightmare behind all of this: trust. Global finance ultimately runs on trust. Trust in currencies, trust in governments, trust in central banks, trust in shipping security, trust that contracts will be honored, trust that tomorrow will function roughly like today. Energy shocks damage that trust, especially when leaders appear unprepared. And once public trust starts collapsing, controlling panic becomes incredibly difficult. That's why governments often try calming markets aggressively during crises. Strategic petroleum reserve releases, emergency diplomacy, quiet negotiations with oil producers, currency interventions, media messaging. Behind closed doors, officials know perception matters almost as much as reality. Because if populations believe shortages are coming, they create shortages themselves. People hoard, companies stockpile, markets overreact. Fear becomes economic acceleration fluid, and social media makes this even worse. Panic spreads instantly now. Videos of empty gas stations, protests, currency crashes, street violence, everything becomes psychologically contagious. One nation's instability suddenly feels global. Meanwhile, America's rivals watch carefully. Because prolonged economic stress inside Western democracies creates political opportunity abroad, China sees chances to expand influence. Russia sees chances to fracture alliances. Iran sees leverage against sanctions. Even smaller regional powers begin testing boundaries during periods of Western distraction. That's another historical pattern people forget. Economic weakness often invites geopolitical aggression, And this is where the entire situation becomes deeply uncomfortable for Washington, because the US government faces contradictory goals simultaneously: contain inflation, protect consumers, support allies, maintain sanctions, defend global shipping, avoid recession, prevent escalation, win elections. Those objectives don't always align. Sometimes they directly conflict. And during major crises, somebody eventually absorbs the pain, usually ordinary people. That reality creates cynicism fast. Citizens start feeling like global systems protect elites more than populations. And whether that perception is fully true or not almost becomes irrelevant politically, because perception shapes elections, protests, social movements, trust in institutions. Now imagine this scenario dragging on for months. Oil remains elevated, inflation stays sticky. Developing economies keep deteriorating, political unrest spreads, markets stay nervous. At some point, the conversation shifts from temporary crisis to permanent transformation, and that may be the most important point of all. Oil at $144 wouldn't just be another economic headline, it could mark the beginning of a different geopolitical era, a world with less globalization, less stability, more resource competition, more financial fragmentation, more survival politics, more strategic distrust, and potentially more conflict, because nations under pressure behave differently. Leaders under pressure behave differently. Populations under pressure behave differently. History becomes more dangerous when fear dominates decision-making, and right now the world already feels unusually tense. Wars expanding, trade systems fragmenting, debt levels rising, military competition intensifying, political polarization spreading. An energy shock entering that environment could act like gasoline poured onto dry ground. Maybe the system absorbs it. Maybe central banks stabilize things again. Maybe diplomacy prevents escalation. Or maybe the dominoes begin falling faster than anyone expects. And if that happens, the next global crisis may not begin with a military invasion. It may begin with a number flashing across trading screens, $144 a barrel, and the frightening part is, by the time most people realize what's happening, the collapse may already be in motion.